Okay, guys, so in this video, we're going to talk about why I think Uber is the next Amazon. So, guys, please, before I get started into this video, I'm going to be putting a lot of useful content in this video and outside the box. So please smash that like button because it really helps my videos, guys. So let's get right into it, guys. So what inspired this article? Well, I read this really interesting article on Seeking Alpha that was basically saying that Uber is not the next Amazon and is not worth $60 billion. And then I saw a very interesting Reddit thread as well, and I saw some things on social media and people were going back and forth on Uber. So I figured I'm going to come out there with a video that is going to blow you guys away and provide some ridiculous insight on why I think Uber is going to be one of the most valuable companies in the entire world in the next 5 to 10 years, and is clearly on the same trajectory as Amazon. So quickly go over their article. Basically, the author is talking about how Uber has a significant cash problem, suffers high interest rates, and lacks a clear plan, and basically saying that it has no chance of becoming the next Amazon. So guys, you can check this article out on Seeking Alpha, and I noticed that many of the complaints on this article are simply short-term problems. So cash burn rates, things like debt, lack of strategy, a lot of these are basically attacking Uber in the short run. But guys, I'm going to give you guys a couple of reasons why I think that it is going to have the same trajectory as Amazon did when Amazon was just starting out as a small bookseller and everyone was kind of laughing at it and people weren't comfortable using their credit cards online, and how it transformed into one of the most valuable companies in the entire world. So guys, how do I want to get started on this? Let's just go right into it. Okay, so where I'm going to start, guys, is I'm going to go right back to that latest quarterly earnings report because I think that numbers tell the story, not emotion. So I know there was a lot of things in that article talking about losses and things like that. So I kind of want to go through this report a little bit more in depth and explain to you guys exactly what is going on. So first of all, we have to understand that Uber is in a business where basically they're making a ton of money with a very little risk. A similar business would remind me of something like Visa, where Visa doesn't take any of the risk in the transactions and all of the risk is taken by the banks. So think of Uber this way. Uber is simply a company where the drivers are taking all of the risk. They're doing a lot of the work. You've got delivery drivers doing a lot of the work. And literally, Uber is just making money per transaction. So if we look at their latest gross bookings over the first quarter of 2020, we can see that gross bookings grew to $15.8 billion, guys. That is just a phenomenal growth. And a lot of their losses were attributed to write-downs, guys. So write-downs are basically decreasing the value of stakes they had in other companies around the world. They had a stake in Grab, which is a big player in Southeast Asia. They had a stake in Didi, which is a big ride-sharing player in China, guys. So what basically, these aren't actually cash losses. These are simply losses in terms of the value of those equity stakes that they have in these businesses that are spread around the world, because Uber is a company where if they feel like they can't compete in that market, they'll simply pull out and buy stake in the biggest player. So that's a way of them to think long term and make a lot of money on that long term investment. So guys, let's take a look at those numbers right away. And I think the numbers really explain what's going on when it comes to Uber. So the first number that wants to come out is, can anybody, what do you guys really think about a company that has over 100 million monthly active platform consumers? This doesn't sound like a bad company to me. I think a lot of the negative news going around Uber is simply just short-term thinking. It takes some companies 30, 40, 50 years and they don't reach 100 million active consumers. Now, this isn't like a social media company where people are on like Facebook or Twitter and they're not spending money. You've got over 100 million people entering their credit cards or paying cash to use this service. That is just ridiculous, a ridiculous consumer base. And no matter what negative things you have to say about Uber, you can't discredit that. And 100 million people is an absolutely very, very, very strong vote of confidence. So as we can take a look here, if we continue looking through these numbers, we see that the company simply is doing basically around $15 billion a quarter in gross bookings. And what we noticed that the biggest increase was eats. So with the whole coronavirus situation, even though people couldn't simply ride, that exploded their eats business. And why is the eats business and why are rides exploding? Well, more and more people are moving into the city and they have less, a lot of people aren't owning cars and a lot of people are busy with work and friends and family and things like that. They don't have as much time to cook. So what's going to happen in the future once things open up and people are very wary of social distancing? Well, it's definitely not going to help public transportation. So that's only going to give people more incentive to take private cars and private rides and stuff like that, because if they don't want to be around a lot of people on public transportation, they're going to prefer basically having a private driver. And with the eats business as well, a lot of people are just getting in to ordering things online. So you've got Uber Eats, they deliver food. This is going to be a huge business because I'll tell you honestly, me myself as a millennial, millennials are all about ordering food online. And the millennials are kind of the new consumer. A lot of the baby boomers and the older generation, they're retiring and things like that. So whatever the millennials are using, that is really what you want to look at, because the millennials are the future of the workplace. So if millennials are ordering food and millennials are ordering Uber, that's where you want to have your money invested. So these are just simply ridiculous traits of a massive company that is going to absolutely explode and well into the future. And guys, when I talk about companies on my channel, I dabble in things like stock options and things like that, but I'm a long-term hyper growth investor, meaning I'm looking for companies that are growing between 20 to 40% plus per year. And when I buy a position, I plan on holding the stock until 2025 at least. So I'm doing all of this with long-term thinking. So what I want to do is, guys, I want to kind of show you those similarities that the Amazon had as well. So if we take a look at Amazon's revenue. Okay, guys, so I want to take you way back. This is a chart of Amazon's revenue, and I found this information. I simply went to macrotrends.net, you guys. This is a really awesome site for kind of visualizing revenue. So, guys, obviously Amazon is making a ton of money. The last fiscal year, they did $280 billion worth of revenue, but they didn't always start out like that. So if we take a look at their 2005 revenue, Amazon was literally making about $8 billion a year. So why do I bring this up? Well, I want to kind of give you guys a visualization of where Amazon was and how far they've come, basically being a company that people were hating on, a company that people weren't using, people were scared to put their credit cards online. 2005, I was graduating from high school. So it just shows you how long 15 years is. It's not really a really long period of time in terms of like your life and stuff like that, because it takes 18 years just to be, just to mature into, an adult. But what I'm saying is that 15 years is like a really long time in terms of the stock market. These companies, even though, Amazon started back in the 90s, from 2005 to 2020 is an enormous period of time. And you can almost look at that time period as kind of like a professional career, right? If you guys follow basketball, you'll see LeBron James has played basically, I think he's played around 17 seasons in the NBA. So where LeBron James started when he was a rookie in the NBA and to where he is now, there's been a huge change. So it takes time for these companies to grow. So if we take a look at this revenue, I'm going to show you guys a revenue chart of Uber, and I'll show you guys a lot of similarities. Okay, so here we are. So as we can see here, their earliest revenue on macro trends is $3.8 billion. And in 2019, it's grown to $14 billion. So guys, I actually pulled those numbers up and did some quick math. That is a compounded annual growth rate of around 52 to 54% annually. So of course these numbers are small, but what will these numbers be in 2025 and 2020 and in 2030? Will there be fewer people using Uber or more? So I think looking at this site and things like that, looking at annual numbers, guys, because sometimes when we look at quarterly numbers and we see losses and things like that, we get emotional and then we're ready to dump the stock and we're ready to get out of a position that can make us a lot of money if you hold on. And for some of you guys that are in your teens and early 20s, you definitely want to be looking into stocks that have IPO'd in the last year or two, because you're just getting started, you're just entering your career, or you're just finishing up in school, and you can simply grow with these companies. So by the time you're in your 30s, you can basically be financially free or even a millionaire if you identify these companies that have IPO'd recently, invest in them, and hold these stocks for the long term. It's exactly what a lot of the boomers did, and a lot of millennials did this when Amazon and Netflix were kind of in their infancy, and they held on to these companies and they got really rich. So this is another example of a company that IPO'd last year that is on that same growth path. $15 billion a year in revenue is not a small chunk of change. That is a lot of money. And 100 million people using this product, that's just a testament. That's not even including the stake investments that Uber has and all of these other companies around the world, like in China and Southeast Asia and the Middle East and all these other markets. That's just icing on the cake. But their core business is doing really well. And obviously, when things open back up in North America and stuff like that and around the world, people are going to start moving around cities again. So now I want to talk a little bit about, I want to address kind of that concern that everyone is talking about. They're burning too much cash. And I want to explain to you guys exactly why that is happening, because I feel like the numbers are a little bit misleading. Okay, guys, so now I'm going to dig back into the latest income statement, and everyone keeps talking about how much money Uber is losing and things like that. And I want to really dig into this income statement to kind of address that concern. So yes, obviously Uber is burning through a lot of cash, but there's a simple reason why, and they simply just have too much overhead. So if we take a look at their revenue over the last quarter, we can see they brought in $3.5 billion, which is pretty good considering that dipping into that March period, a lot of cities were on basic lockdown, and Uber basically saw an 80% drop in rides. But if you take a look at that cost of revenue was only 1.7 billion. So, Uber basically was only chewing up about half of the money to generate that revenue, because remember, as I said earlier, basically Uber is going to be making money every time there's a transaction made. So they remind me of Visa. Every time someone books on their app or orders food or something like that, Uber makes money. The same reason where Visa, every one time someone taps their card, Visa makes money. But Uber has no risk. So if their drivers stop working, no risk. They don't have to pay for maintenance on the cars. They don't have to pay for insurance on the cars. They're just making $15 billion a year with very little risk. So let's look exactly what is really going on. And it's simply, the fact is that Uber is just spending too much money, has too many employees. So as you can see here, general administrative costs were 800 million, too much research and development, 640 million, 500 million for operations, and almost $1 billion on sales and marketing. So this is like what is really keeping the company not from turning a profit. A lot of those losses were write-downs. So really what Uber needs to do is trim their staff. When Uber trims their staff, and this kind of whole lockdown thing is about 6 months in the rear view window, Uber is going to be making profits. I mean, it's just right here in the numbers, and it's just so clear that people are kind of very short-sighted, because I think people have a tendency to always think about the past, guys, because they're looking at what Uber did in the past. Uber hasn't made money in the past. But the thing is that change is the only variable that's guaranteed. And we know that Uber has already changed this. So I want to show you guys an example of how Uber is making drastic changes, because obviously we don't want to see the CEO, Dara, I have trouble pronouncing his last name, but Dara, basically, yeah, he talks good game, but we actually want to see him back up those results. So as you can see here, I'll show you guys an article to see profitability. So as you can see here, basically the short of it, it says Uber will cut a total of 6,700 jobs. So, and they're going to reduce investments in non-core projects. So what that means is these bloated numbers are going to go down. Cutting almost 25% of your staff is going to cut a lot of that bloat down, and that's going to show up in the income statement. So for a company like Uber, I'm really only looking at two things. I'm thinking long term here. I'm thinking 2025. I'm looking at revenue and monthly active users, because all of these other problems can be fixed in the short term, but what can't be fixed in the long run is revenue, and do people use your product? If people are using your product, and 100 million people use their product over the last 3 months, if you have 100 million people using your product, and you're bringing in $15 billion a year, and everyone's trashing your company, what happens when things start to go right? So I think the opportunity for Uber is just immense, and I think this is definitely going to be a trillion-dollar company well into the future, and it's going to basically be like where everyone was saying, did you invest in Amazon? Did you invest in Netflix? I think they're going to be saying, did you invest in Uber in the future, guys? So that's just my prediction. And full disclosure, I am an Uber shareholder, and I do use the product all the time. Obviously, I haven't been able to use it as much during these whole lockdowns, but before the lockdown, I was using Uber very regularly. And like I said, I couldn't imagine my life without it. So when I invest in something, I really like to invest in products that I use myself. And by showing you guys these numbers, I hope I provided a more comprehensive case on why I think Uber will be the next Amazon ton by 2025, but to give you guys a conservative estimate, probably more something like 2030, guys. So I hope you enjoyed this video, and like I said, please give me a thumbs up if you enjoy my content, and subscribe to my channel because I post videos on the stock market every day. And I want to thank you guys so much. This channel has grown a ton, and I really appreciate all of your comments, guys, and all of your support. And as always, guys, if you want me to cover any stocks, let me know in the comment section. So that's it until next time, guys. Take care.